Here we go, first video of 2025. Hope the year has treated everyone well thus far. I ended up taking some time off just to try to refine my strategy, get some consistency going, and build some momentum. So purely just focusing on the charts and not worrying about making content or editing videos. However, I think finally got to that sweet spot where I am able to really start seeing some consistency. And a lot of people have been asking about like my setup. I use Tradovate right now, and I'm currently trading with Tradeify. I do not partner or anything with any prop firm. There's been a lot of, prop firms that have been failing or not paying out or changes or anything like that. I think Tradeify is likely to stick around, and it seems like they have the kind of management aspect and just like overall risk mitigated as with like the newer rule changes and things like that. But that's not what this video is. This video is more or less just kind of showing how I use Tradovate, how I set it up, and how that's allowed for more consistency. And hopefully this is something that you guys can get some information from, and maybe this will help you in your trading as well. So as most traders probably have, multiple screens or whatever, obviously everyone's setup is different, and it's all comes down to just your overall preference, what you like, what you don't like. Having more monitors or more information is not necessarily a good or bad thing. Sometimes you can get overwhelmed with the amount of things you're watching. For instance, if you're trying to get in like a NASDAQ trade, but like you're watching every single big tech company, and maybe, Nvidia is not going up, but everything else is, like that could, cause you to potentially miss out on a trade or, get in late or whatever. For me personally, I found the most success watching NASDAQ in multiple time frames. For instance, the 5-minute, the 15-minute, and then the daily / 1 hour time frame. I'll kind of, as you can see here on this trend line that I drew, is I'll watch the daily to see kind of where we're at, if there's any key levels that we're around, if there's any previous levels for support or resistance. And then off of that, before the trading day, I will change that daily time frame into the hourly time frame. I've just seen a lot of like pivoting really on the hourly time frame, and also if it's a little choppy on like the 5 or 15 minutes, sometimes the hourly time frame can kind of show you the bigger picture and the overall direction that the market is going. That's just something I've personally noticed. And then as you can see, I also have like the 9, the 20, and the 50 EMAs. For the hourly chart, I just use like the 50 EMA really, especially on that daily, as you can see. Once we got back above the 50 EMA recently on the daily, we've kind of moved straight up. Obviously, there's a lot of news this week, so anything could happen. We could come all the way back down and test the trend line, and we could keep going. I would definitely play it safe and play it small this week, especially let everything kind of digest and let the market kind of figure out where it's going to go. And that's kind of why I didn't take a trade today. I figured that there was going to be a lot of chop back and forth, and as you can see, it's kind of what we did. Even if we look in this hourly time frame, there's just not a whole lot going on, and I didn't want to get like a risk of like getting absolutely destroyed, getting chopped up because of something that was said or something that changed or anything like that. So I just kind of watched today. Obviously, it's not that easy sitting on your hands as traders. We're always looking for those opportunities. However, I found that when I'm actively trying to force a trade, that's when I typically lose, and then you risk going on tilt because you're like, well, why did I do that? And then you got to make the money back, and then it's this huge spiral. And that's, I think, why most prop firm traders end up blowing accounts and never getting to payout. With all that being said, currently I'm just focusing on building up these 5 Tradify accounts. I am trading like 1 NASDAQ contract or up to 10 minis per trade, focusing on high probability setups, not risking a ton, just really trying to make sure the trade makes sense in all time frames. And what I mean by that is you can have your entry, your stop loss, and your take profit show up on all 3 time frames at once if you use something like Tradovate instead of having multiple different charting platforms where where you execute your trades doesn't show the exact levels on those higher time frames. This allows you to kind of see if where you're risking makes sense, if your risk actually would invalidate the trade if it does hit that level, and just making sure that you're overall like in a good position relative to those higher time frames. And this has saved me a lot because then I don't chase these trades, and I'm aware of when the 15 minutes going to close, when the 1 hour time frame is going to close, because typically this is when you start to get like some of the reversals, or price action starts to either respect or break out of certain key levels. And if you're just super zoomed in to the 1 minute time frame, you're not able to see these bigger levels and kind of see where you're at in the chart, where previous support and resistance was, because you're so focused on like that candle to candle versus like the daily or weekly ranges that will allow for higher probability setups and more likely areas where price is going to hold or price is going to like break out through or reject from. And that's what's brought me a lot more consistency, especially so far this year, is watching the larger time frames, letting trades come to me versus like forcing trades to get in, getting a bad entry, like having some FOMO, or just like getting in at a level that doesn't make sense. I just wait for a break and a retest, or a breakdown and a retest for a key level, so I have a good risk to reward, and just allow that trade to play out. If it reclaims like the level that I thought it was going to hold below, or if it breaks below a level that I thought it was going to hold above, I just simply exit my trade because the trade's invalidated. Previously, when I was not profitable and when I was not consistent, I would just hop into a trade because I thought some momentum happened, not really seeing the big picture overall, and my trades lasted less than a minute, versus now my average trades are between like 5 minutes and 15 minutes because I'm holding one NASDAQ instead of trying to quickly scalp in and out with more NASDAQ contracts where I had a lower consistency rate and I had a higher risk on the table at all times, which led to more blown accounts. So my biggest tips for the start of 2025 is use smaller risk, which means use less contracts, hold your trades longer, and use the higher time frames. As always, if you have any questions, drop them in the comments below. I'm going to be doing more frequent videos going over kind of things that I'm seeing, things that I'm struggling with, and then answering some of the questions that I get in the comments. So definitely don't hesitate to reach out down below.